the 2031 and 2035 bonds continue to record sustained demand, with trades at about 21.6% and 21.5% respectively. Meanwhile, the T-bill secondary market remains active as investors react to the results of the midweek 670 billion naira primary market auction. Subscriptions hit 3.2 trillion naira and a final allotment of 670 billion naira. Ibukun Omojufehinsi, Treasury Team Member at Access Bank, joins me now for more market movements. Ibukun, thanks a lot for joining us on the show today. Walk us through the highlights of this record high we see here in terms of the outing this week's midweek primary market auction.
Thank you very much for having me, David. So this week, the DMO had the auction, which results came out on Wednesday. We saw a subscription of 3.2 trillion, which is over 4 times of what the DMO was actually offering. This DMO was offering 670 billion, which was 50 billion on the 90-day, 120 billion on the 182 days, and 500 billion on the 365-day. However, the DMO stuck to their guns, and they actually even allotted what they actually planned to, what they actually offered, which was 670 billion. And we saw the stop rates for these bills at 18%, 18.5%, and 20.32% for the 90, 182, and 365 days respectively. So yes, the subscription for these bills was actually very high.
Now, Ibukun, let's also talk about how things have remained on a positive note, looking at the FX market now. How stable do you see the market going forward?
For the FX market, yes, the NAFEX depreciated by 2 naira 65 kobo to close at 15.05 naira to the dollar. And yes, we've been seeing a bullish momentum even in the NFM market, which closed around 15.02 yesterday. We've also continued to see the fact that the CBN is actually intervening in the market to ensure that rates are actually even stable. And currently in the market, we are seeing rates at 1500 levels, so we don't expect any significant change in the market, except probably if the CBN decides to intervene. So, but currently rates are around 1500 levels for the FX market.
And some of the news fillers investors definitely have their eyes fixed on is the expectations around the rebased GDP report. We're also looking at the increases in the 2025 budget, which is expected to be passed at the close of this month. And then we also have the MPC in focus. How are investors positioning, weighing all of these different fillers at this moment? And in terms of further market movements, we should expect for the month of February as we are inching further into the middle of the Q1 calendar.
Yes, the MPC, they are meant to hold the next meeting on the 17th and 18th of this month. And analysts are actually even expecting the results of this MPC. And the result of this MPC is going to be hinged on the inflation data that's going to be released next week. Most analysts are actually anticipating a reduction even in the inflation rate as a result of the rebasing of the methodology in calculating this inflation result. So most participants of the market are actually cautious on this, and we expect that by next week trading would be on a cautious note. Though what we are seeing currently now on the bills and the bonds space is that yes, it's actually currently bullish, where we are seeing bills trading at around 19 levels and bonds are actually even trading below from where they actually opened previously by 100 basis points decline from the previous level. So we expect that yes, it's going to be based on what the result of the MPC releases, and it's going to be based on the inflation data that will be released next week.
Thanks a lot for your time on the show today, Ibukun. It's been a pleasure. That was Ibukun Omojufehinsi, Treasury Team Member at Access Bank.